Hello, welcome to Business Breakfast, coming to you live from our studios here in Lagos, Nigeria's commercial capital. I am Frank Omalape. Coming up in a moment, Nigeria's oil revenue plunges as production output drops in the month of January. This is according to government's Ministry of Petroleum Resources and the Nigerian National Petroleum Company Limited in its latest report. In the same vein, Nigeria's foreign exchange reserve recorded $481.4 million decline in the month of January to close at $40.04 billion. What is the implications of these continuous depletion on the revenue target of the government? Recall Nigeria makes its crude oil output target for January 2022 pumping about 1.46 million barrels per day against a target of 1.68 million barrels per day as approved by the Organization of Petroleum Exporting Countries. And also coming up on the program, investors lose 97.29 billion naira as NGX All Shell Index declined 0.3% as the index closed below 47,000 basis points on Wednesday. These and many more are some of the highlights to expect on the show today. This is Business Breakfast. But first, let's take a look at some of the top stories making the rounds now. The management of Sheba Exploration and Production Company Limited, SEPCO, in receivership has confirmed the unfortunate incident of a fire outbreak that engulfed its offshore facility, the Floating Production Storage and Offloading, otherwise called FPSO Trinity Spirit, located at the Upokiti Terminal, Delta State. The floating production storage and offloading vessel with the capacity to process up to about 22,000 barrels of oil per day and inject up to 40,000 barrels of water per day and store 2 million barrels of oil exploded and sunk yesterday, 2nd of February 2022, while stating that investigations were going on to ascertain the actual cause of the explosion. The organization noted that as required, it had already reported the matter to the appropriate government agencies. It further confirmed that there were 10 crew members, but that everything was being done to ensure their safety and security. And away from there now, the Federal Executive Council, FEC, has approved contract worth $328.8 million in consultancy services for the supervision of the various railway projects in the country. FEC also approved 115.4 billion naira for the dualization of Kano-Kazaure Kongolam Highway in Katsina State. This were revealed by Minister of Transportation Chibuke Amechi after a weekly virtual FEC meeting, which was presided by President Muhammadu Buhari at the State House yesterday. The minister also said 3 railway projects are yet to start construction, and they include the Port Harcourt, Maiduguri, Kano, Maradi, and then the Abuja Wari. Speaking at a briefing, Minister of Works and Housing, Babatunde Fashola, disclosed that the council approved a contract for the dualization of the Kano-Kazaure Kongolam Road at the cost of 115.4 billion naira. Fashola also explained that the project, which covers about 131.4 kilometers, was expected to be completed within a period of 48 months. Away from there now, the Vice President, Professor Yemi Osinbajo, will today, 3rd of January 2022, inaugurate the Integrated Energy Planning Tool in collaboration with Sustainable Energy for All. A statement signed by the Director of Communications, Sherry Kenny, said the launch will be held with support from the Global Energy Alliance for People and Planet and the Rockefeller Foundation. It said that the new data-driven interactive platform will support the country's ambition of achieving Sustainable Development Goal 7, universal energy access by 2030. According to the statement, the Nigerian Integrated Energy Planning Tool is the first truly integrated energy planning platform that incorporates the requirement for universal residential electrification, institutional electrification, powering of conductive uses, and access to clean cooking. Alongside the Vice President, there will also be other global speakers at the virtual event, including the United Nations Deputy Secretary General Amina Mohammed and CEO, Special Representative to the UN Secretary General for Sustainable Energy for All, Damilola Gumbayi, and President of the Rockefeller Foundation, Dr. Rajiv Shah. And now Nigeria's 4 major aviation unions have vowed to ground activities in the sector from Tuesday, February 8, 2022, over the failure of the federal government to release the negotiated conditions of service of aviation agencies since 2013 and the non-implementation of the national minimum wage consequential adjustment since 2019. In a notice of industrial action jointly signed by the officials of the unions and issued to aviation workers, the association stated that flights and related activities will be suspended. The unions include the National Union of Air Transport Employees, Air Transport Services Senior Staff Association of Nigeria, Association of Nigeria Aviation Professionals, and the Amalgamated Union of Public Corporations, Civil Service, Technical and Recreational Services Employees. Well, and that's it for the top business headline now. Coming up in a moment on the program. After this break, our focus is on Nigeria's crude oil production as oil revenue plunges. Let's take a moment and we will be back to discuss more. Glad to have you back. Now, this is Business Breakfast coming to you live from iBrandTV studios here in Lagos, Nigeria's commercial capital. All right, Nigeria meets its crude oil output target for January 2022, pumping 1.46 million barrels per day against a target of 1.68 million, as approved by the Organization of Petroleum Exporting Countries. Meanwhile, the Federal Ministry of Petroleum Resources and the Nigerian National Petroleum Company Limited have blamed the low output to spate of pipelines, vandalism, delaying the full implementation of the Petroleum Industry Act, among others. Nigeria, Africa's main oil producer with 18 operating pipelines and an average daily production of 1.8 million barrels in 2020, dropped to second place in 2021 behind Libya in crude production. So the question is, what is the implication of these, of Nigeria's crude oil target revenue in 2022 budget? So let's bring in our guest now. Mr. Kaudi Ekundayo is the publisher, Energy Times. He joins us via the telephone. We appreciate your time, Mr. Ekundayo, for joining us.
Thank you very much.
And we say Happy New Year to you.
Yeah, thank you. Happy New Year.
Yeah. So Nigeria's oil revenue plunges due to drop in production output, according to officials of the Federal Ministry of Petroleum Resources and the National Petroleum Company. What do you suppose is the implication of these continuous depletion on the revenue target of the government? This is not the first time, of course. Nigeria gave way to Libya, coming in the second place in 2021.
Yeah, thank you. Let me correct this question. That's why December was not included in Africa. Libya is no longer where to be found. There's a crisis in Libya. So Nigeria is leading the African country now. The daily production we are getting now is about 1.620 million barrels per day. And fortunately, as at yesterday, OPEC increased the output of each member country by 400,000 barrels per day, which means that Nigerian crude oil production per day will now rise to 1.748 million barrels per day. The problem we may have is why Nigeria has not been meeting its quota. What we should be talking about is why Nigeria has not been able to meet its daily quota as stipulated by OPEC. The problem we have has been consistently community crisis, whereby the oil companies declare force majeure on which they are facilitating. Let me give you an example. In December last year, which is one of the reports that came out by FAC, which released by the Nigerian NNPC, that indicated that almost 60 million barrels per day were lost throughout the year, the month of December. And the cause of this majorly has been the issue of vandalization as well as the community crisis. And why we have been having this is that some of these terminals, where some of these where the crude oil is listed abroad, are shut down during the period. And we have it consistently like that every month. So it's not that Nigeria doesn't have the ability to produce. Yes, the problem we have is ability to export and meet the OPEC quota. As I'm talking to you, sir, the crude oil production in Nigeria is stable. But the export is declining. That is where we are. And fortunately, Nigeria budgeted $60 per barrel.
$62.
Right now, fortunately, and we thank God, we have 79 as of yesterday.
But the government is blaming the fact that there is pipeline vandalism. That is why the revenue is dropping in terms of oil revenue in January. So how do you reconcile this fact that the government is saying, look, our revenue is dropping because of this vandalism and some other factors like thievery and all that?
Yes, that is what I'm saying, that some of the terminals, almost 11 terminals, will not reach crude oil yet in December. Likewise in January, equivalently. What I said, if you remember, I said vandalization. Vandalization means the bad life voice. Community challenges where the block the flow of the crude oil. So it's not that Nigeria is not getting money, because we are having excess, almost $29 per day. We have excess of crude oil now that we need to do. And when you multiply it, it's almost over 1 million barrels per day. That's a lot of money which goes into the excess crude account, which the local government, federal government, and state government share at the end of the month. And that's a lot of money. So, it's one government where this money is going to. We are producing. Crude oil is flowing. Now, we've opened before 1.7 million barrels per day now for export. Why are we not, even if we are not exporting up to that amount, even when we are importing, we still having high excess on which you can take care of the loss. Are you getting it, sir? Which can take care of the loss. Yes, the budgeted $60 per barrel.
No, I think just a moment. Just a moment, Mr. Kundayo. I just want us to, put out these figures out there. Yes, I think the budget, the benchmark in the 2022 budget is $62, right? While Nigeria has also is targeting to produce about 1.8 million barrels per day, as against the target of or the quota of OPEC, which is 1.68 million barrels of crude oil per day as well. You have also said.
Sorry, what is OPEC quota you mentioned?
What did you say? Just allow me to land. Just allow me to land. Just allow me to land, and then you can continue from there. You have also said that the issue is not with the production, but the issue is with the export. I mean, so how do you make sense of this? That the fact that the issue is not with the production, but the government has said the production is the problem, and then you have said the issue is with export. So how do we make sense of this? That the fact that they have said it is depleting, it is affecting the revenue generation from oil. And we are saying, what is the implication of this on the economy? By extension, of course, more importantly, the 2022 budget as well, and the revenue target.
Yes, thank you very much. As I said, the crude oil we are exporting is where the challenges. The oil companies are producing, and that's what we know that we don't have crude oil, even the FPSO. What I'm saying is that we are having challenges exporting this crude because of community challenges and vandalism. And this is an implication of that in the Nigerian economy is that we do not have enough revenue and the budget will not be met. That's a very strong implication. Because when you targeted at certain things, like for instance, you say you are exporting 1.8 million barrels per day, and then you are exporting 1.4. That means you are under supplying to the market. In other countries, you take over your market. This is what Russia is doing. This is what Saudi Arabia is doing. But as now, as I said, Nigeria is leading the Africa in terms of exports. That's why the challenges we have in the Nigerian system. Then what I'm saying is that the production, yes, the people are seeing the decline. But when you look at the figure, of production, I don't seem to see that decline. Yes, they are not doing Israel as they're supposed to be. in terms of supplying to the market to make sure that they have excess crude. If you remember, last year, OPEC Plus has been adding 400,000 barrels per day to each of the members of countries. And the reason is that they are trying to keep the price at low level so that it won't be there won't be excess crude oil in the market, that we are affecting the price. And since they've been doing it, you can see from last year when we have it at low as $50 per barrel, now, because of the control they give that they are opening the market, the price has been dramatically up. So the price that yesterday I said they are having 79, which is likely to be $80 per day. In fact, the point this last month, it got to $80 per barrel, and which is no pain for the Nigerian economy. Even though we are not meeting the target, at least we are getting reward for the loss. Some of the, reward for some of the losses we have. Yes, definitely that $50 per barrel. They are getting it at 80, they are getting it at 79, which is good for the economy. And definitely, I know, I think the government said 1.6 for the economy for this business. Yes, the OPEC, Nigeria cannot export more than what OPEC says they should export it. Definitely, Nigeria cannot be exporting more than that. And if you look at what I saw yesterday, before yesterday, concerning the fact this NFPC presented to the meeting. Yes, Nigeria got, Nigeria exported 1.6 million barrels per day. That's over 1.6 million barrels per day into the market. Which to me is very realistic because that is what OPEC says.
But let me quickly come in. But you don't think this difference, this gap, because if we're given target of 1.6 and then we're exporting 1.2, between 1.2 and 1.4, are you saying this gap, this deficit doesn't make any difference or impact in the revenue target?
It will make a lot of differences. What I'm saying is that there was even a mistake in the budget. I'm sorry to use this word. The government or the advisor to the president supposed to have known, understand the dynamics, fundamentals of crude oil market. When I saw that package, I laughed. That was like I said, the federal government knows that we are being guided by open orders, which are being released to the market every month. Now they are targeting 1.8. How do you intend to export 1.8 million barrels to the market? And looking at the situation we have at hand, even in Nigeria, we have another system, we have definitely some challenges, background leakages, even naturally. These are all the challenges which are being expected. There are some challenges because government has budgeted that 60,000 naira multiplied by 1.8 million barrels per day. Government is operating consistent based on that particular budget. Definitely there is going to be deficit. But the deficit should not be too much because the increase in the price to be able to fill the gap. They are not filling the gap 100% at this 20% of the
Okay, let's look at it again. I just want us to dwell a bit on that and look at the dynamics here. Well, because if the government is saying there is no fund, and so the only way alternative is to borrow, to take more loans, and then of course there is something we can do to meet up or to breach that deficit. I mean, so how do you think we can bridge this deficit here? Because if we're giving, if the quota is the target is 1.6 and 1.8 barrels of crude oil per day, and we are not meeting that target, what it means therefore is that it will affect the revenue, and in the same way there will be huge, the deficit in the 2022 budget will widen the more. So how do you think we can address this issue of taking to borrowings to address the deficit?
Let me say this here, and I'm sorry to leave this one. I don't think the federal government is sincere in terms of expending. We have LNG that even making more money than the crude oil we are producing. Nobody is talking about it. focusing our attention on what crude oil we are getting, disappointing the invested price. My brother, government is not sincere about the spending of this oil and gas money. Nigeria is rich. I would say it anywhere. You see, let me tell you, when somebody told me, I think from another station last year, concerning the fuel subsidy removal and the ticket, he said he want to give to let contribute to Nigeria. I laughed when I heard it. I'm not trying to tell you something about what and the other time. I laughed. I said this thing and never will. I predicted that the Nigerian government will not remove the subsidy. Then the money they want to give is like just making some people to enrich some people, like we witnessed it in the last now, where government was giving money out to different people to Nigeria is eventually moving to the pocket of private schools. I thank God that somebody didn't go ahead to make that same mistake again. And we thank God that the church family is being suspended. Because I've never seen things in the world where a big country of 250 million people will rely on the population without any single refinery working. I've never seen it before. Even a small country as they have refinery. Ghana has a refinery. There is no country in the world. Yes, has almost 150 refinery. There is other country in the world. I don't know why you want to remove something because say they are considered rich people. What the government have provided is not to enrich the rich people. Is there any fundamental you have provided on ground to make sure that the rich people are not being rich? More.
Those are salient questions.
Now, Nigeria now, they continue.
Those are very key questions. Those are very key questions, and I'm sure perhaps the government should be able to address these issues you have put on table going forward. But just before we wrap up, I just want us to look at these. 90% of Nigerian earnings comes from crude oil. Can you hear me? Hello, Mr. Kundayo, are you there? Hello? Hello, Mr. Kundayo. Okay. So yes, I was going to ask you this last question before we wrap up. 90% of our earnings comes from crude oil sales. So despite higher oil prices, external reserves fall by 1.2% in January. That's to about 40 billion. So it's losing about over 300 or about 400 million US dollars in January alone. I mean, how do you think, is there any alternative to ensure that Nigeria boosts its foreign reserves? What alternatives do we have here?
I didn't get that question. You said,
okay, I was asking you that. Yeah. Okay, I was asking you that in January alone, the country's foreign reserves depleted by 1.2%. That's about over 400 million US dollars in January alone. And you know that 90% of our earnings comes from crude oil sales. And so, what alternatives do we have here to boost the external reserves?
Okay, thank you very much. We have gas. LNG is producing. We have gas. I am suspecting we are likely to have that challenge in continuity because some percentage of Nigeria LNG has been diverted to local consumption now, which is an indication that it will deplete the foreign reserve further. Normally, LNG export all its gas internationally, except maybe 20% are allocated locally. That is a big challenge because we have LNG, we have protein, we have propane. If they are diverted the propane to Nigeria, which is cooking gas, normally it exports it. It only takes 20% currency. Normally, that foreign currency will have been packaged into the foreign reserve. So we are likely to continue to have that. But what I'm saying is that with the crude oil prices rising now, yes, although we are not meeting the target, we are not likely to have that serious depletion because the federal government are arguing with some of these things. That is one. Two, the second one is this signature bonuses with those who buy the marginal feed they are buying. They are going to pay all this money to foreign reserve. It goes to the federal government account, it is foreign reserve, and some other central bank account. And besides that, there are other things the industry are paying. It's not only crude oil export that generated that foreign exchange from Nigeria. We have other things like taxes, royalty, which all these companies are paying. They are paying. But what will boost further the foreign reserve for Nigeria? This is the signature bonuses which the oil companies are paying. Those who know the bid, they have ordered them to pay, and after they are paying the signature bonuses, it will go to the system. We have every oil company that those who won the bid that won the bid last time, and every of them will not pay. So it's like the federal government is going to auction that giving it to the second bidder. That's the next bidder for that system. So by the time they pay this money, it
Yes,
goes
sir.
into the foreign account, and which it also agreement what we are using to the export.
I think we should leave it there.
And the federal government is likely to get the money this year.
Yes, I think it's a good place to leave it. Thank you so much for your time, Mr. Kayode Ekundayo, is publisher Energy Times. We appreciate your time on Business Breakfast.
Thank you, sir.
Yeah.
Thank you, sir.
You're watching Business Breakfast coming to you live from our studios here. After the break, we'll take a look at the Nigerian equities market as bears sentiment returns to market on Wednesday. Chief Research Officer Investigator Consulting Limited, Ambrose Omodion, will be joining us after this break. Please stay with us. Glad to have you back. Now let's turn our attention to equities market. That investors lost 97.29 billion naira as NGX all share index dipped by 0.38%, closing below 47 basis points. They closed on Wednesday. Equities markets closed on a negative note, depreciating by 0.38%. to close at 46,930.66 basis points against 1.04% recorded previously. Now, year to date has dropped from 10% to 9.87% at the close of market on Wednesday. Market bread closed negative as Ikeja Hotel led about 20 gainers as against 33 losers, topped by ABC Transport at the end of a trading section on Wednesday. So investors profit taking in MTN Nigeria, Zenith Bank PLC and at the stock exchange losing 98 billion naira at the close of Wednesday. Sector performances were relatively mixed. If you look at the sector movement, the NSE banking went up by 2.15%, NSE 30 declined by 0.01%, while NSE insurance went up by 0.84%, and the industrial declined by 0.17%. Closings out, while oil and gas up by 0.62%. Well, sector closed positive and the consumer goods sector closed flat as well. Zenith Bank yesterday dropped by 3.11% to close at 26 naira 50 kobo, while UBA depreciated by 3.41% to close at 8 naira 50 kobo per share. MTN Nigeria also down by 1.23% to close at 200 as a GT company corporation dropped by 1.07% to close at 27 naira 70 kobo per share. So it's time to bring in our regular analyst on the show, Mr. Ambrose Omodion, Chief Research Officer, Investigator Consulting Limited. He joins us via the telephone now. Thank you as always, Mr. Omodion, for joining us. Take us through the market of yesterday. We are seeing a bit of pullback yesterday. Just as you predicted, perhaps we're seeing a kind of pullback that may lead to market correction. Is that correct?
Yeah, actually, many in the world, market correction or pullback, profit taking are part and parcel of the market. What we saw yesterday was a little pullback on profit taking, but the good thing is that we are already entering the mid or the center of the earnings season, because hopefully by next week we'll start seeing companies with corporate action for financial year ended 2021. If that starts happening, it's going to change the face of the market again. But the pullback is good because it creates opportunity for investors or traders to buy low again, because in equity market it is buy low and sell high. I told you that in the market we have two kind of investors, the traders and the investors. The investors are the ones that are waiting for the dividend, while traders are looking to know what they can make capital appreciation. Meaning that the pullback for me, the traders are smiling because they took profit and the price came down. They are coming to buy at the lower price so that when they go up again, they sell. While those that are waiting for dividends are really buying those that will pay the higher dividend that will support the price of the stocks. For me, this is a good development after the market are ready for January, getting almost 9.15. And it started this month again on a positive note. For me, what we're seeing is normal, and there's not any panic to the market, rather we'll continue to buy low and sell high, as I've said earlier. Yeah.
Look at the shares of MTN. Look at the shares of the two, some of the top five, some of the two above the top five banks. Talking about Zenith Bank closing at 26 naira 50 kobo, the close of yesterday, and UBA, which depreciated by 3.41% to close at 8 naira 50 kobo. The shares of MTN is going as high as 200 naira. How strong are some of these shares?
No, for me, MTN pulling back is a great opportunity for market players to use the whole MTN. Actually, I'll tell you that the sector again is operating the sector that is in for now, because anywhere in the world, most of the economy are going digital. And if you want to go digital, you need data to run your digital economy. And this is the area that MTN and Airtel are really strong. And if you look at MTN result that was released recently, you see that the data sales also contributed a lot to their sales and the bottom line. tell you that the demand for data will continue to go up. Now that they have gotten license for the 5G, for me, it will make their data and the internet system to be very fast. And that also attract more patronage for MTN. For me, seeing the price coming down, it's a good opportunity for you to buy MTN at the lower price because it's a future for the company. So those are thinking long term, they decide to buy MTN stock if it comes down. Even the Airtel pull back the opportunity to buy them because these are the tech or communication companies that are really driving growth in different climates of the world. Now that BPN are giving a license to go into banking payment service bank, that payment service will go to bank. And also, I see that the 5G is a plus for them. And also, I see there's a lot of things for in that space. I can see that their last offer was highly oversubscribed. And that will tell you that the offer has really also created additional activities for the market because I tell you, the young people who are attracted to this market due to their, the work they are marketing and using technology also to deploy their allotment. And they are the first company that have done online allotment. And it was successful because they have technology at their back. For me, it's a good one. And it's also an eye opener for other companies that want to know right issue or program activities in the future, how to deploy this online allotment and for their offer. It's a good one for MTN. For me, the price coming down makes it more attractive to buy low.
We're seeing an entry, a bit of, will I say, strong appetite for the shares of Ikeja Hotel at the close of Wednesday. Ikeja Hotel recorded the highest gain of 10% to close at 143 per share. What does it tell fundamentally for the stock?
Yeah, actually, the hospitality industry are trying to recover from the heat of COVID-19. But I believe that for Ikeja Hotel, I'm not expecting anything fantastic in terms of number from Ikeja Hotel because they've not been consistent in the payment before now. But for others than that industry, that when it comes to transport hotel and others in that space, I see that an improvement. That is why I see that the air service industry, the airlines, that's why their results are also good because this vaccine that we introduced last year to kind of reduce COVID-19 by mature the economy, which has led to Nigeria, has also improved that space of hospitality, which involve a hotel. For me, it's a good one. But if you are trading in Ikeja Hotel by now, you have to be very careful because the different class is not more. If you trader that catch up your profit and also come out because I don't expect to pay, a good dividend that will support their price. That's why the price is also selling below 2 naira. I don't see dividend of much coming from them because this company has total rate before now. Let's see what they are going to come out at the end of the day.
Hospitality sector is one of the most hit or the worst hit during the COVID-19 pandemic. How much should we expect this quick growth or recovery in that sector?
Yeah, there will be because as we continue to vaccinate, I think that is why you see in Nigeria here, the Omicron has not done more harm. Thank God. But I tell you, because the government are taking measures and our medical teams also have put measures here at the post-state level, that's why we are not seeing Omicron which is happening in other climates. But for me, it will affect them more because the vaccine is still there. That means they won't close down hospitality sector again because we're not closing down our economy. For me, it's just the recovery stage. At the recovery, that's also invest wise because the recovery process. Once it's stabilized, but the result that came from NACO and SACO shows that the sector also gradually passing back. Yeah.
Let's wrap it up now with this question. You take us home with your outlook for the rest of the week. It's the fourth trading day of the week, and we have one more day to go for the business week.
Yeah, for me, I see some stuff that lost yesterday, some recovering today, or some also will go down today, tomorrow. That's why between now and tomorrow, I expect a mid-trade. And that mid-trade does not mean that the market should be on a big rate that people start buying. No, this mid-trade is an expectation of the corporate action of those that will start paying dividend from next week. And when it's on between the place of the market, any mid-trade between now and tomorrow will create opportunity for that to buy low. But I believe that today we can see some little buy opportunity in the market that people are going to buy. And that might put the market up marginally. But let's see that we expect the mid-trade today and tomorrow.
Yeah. I think we should leave it there. Thank you so much, Ambrose Amodion, Chief Research Officer, Invest Data Consulting Limited. We appreciate your time.
Thank you.
You're still watching Business Breakfast. We'll take a moment now. When we come back, we'll look at the commodities market. Please stay with us. Glad to have you back. Now let's look at the commodity market. In the shortest meeting so far in its history, OPEC Plus decided on Wednesday to increase the collective production by 400,000 per barrels in a day. In March, keeping unchanged the plan to boost output and pushing Brent above $90 per barrel again with the perpetual modest production high. The ministers of the OPEC Plus alliance will meet via video conference in just 60 minutes of the meeting in the monthly production hike of 400,000 barrels per day for March. Some analysts and possibly traders had expected a high production increase considering the recent rally in oil prices to $90 that has surely frustrated major oil-consuming nations, including the United States. Earlier this week, Goldman Sachs had expressed the view that OPEC Plus might decide to announce a larger production increase for March than the usual 400,000 barrels per day, considering the oil price rally to $90 and the potential for renewed discontent from major oil importers at these high price levels. OPEC Plus, however, confirmed the 400,000 barrels per day increase in record time and didn't even plan a press conference after the meeting. Brent crude prices returned to $90 per barrel just after news of the modest production increase and the record short meeting broke. And now to metal commodities market now. Gold prices could be looking at sideways price action for the rest of the year. The biggest test comes in mid-2022 when inflation begins to stabilize and markets absorb higher interest rate, according to dailyfs.com senior strategist Christopher Vascio. After a quick rally above 1,850 an ounce, gold could already be running out of steam, according to Kitco News, pointing to a move in the U.S. Treasury yields. Historically speaking, gold prices tend to go down when real yields go up, according to him, and in an environment defined by the tighter monetary policy over the course of this year, real yields will continue to move higher. Vascio says gold ending the year at $1,800 an ounce, which is about where it is trading now. At the time of writing, April commerce gold futures were last about 1,801.40 cents, up by 0.28% on the day. Well, and this is where we call it a wrap on today's show. Many thanks for watching. I am Frank Omalape. I'll be back again tomorrow. See you again.
vests were fashionable for women to wear as part of their everyday style in the late 1900s and early 2000s. Vests have been seen on the runway and in the streets ever since. To say the least, the vest is legendary, and it's still very much in trend till date. With a pair of leather pants, just like the popular schoolcore trend that convinced us to wear pleated skirts and sweatshirts, this wardrobe combo is suddenly everywhere. The best part about this style is that it's simple to put together, while also seeming unique and fashionable. In other words, don't overthink it. A basic sweater vest styled over a black top with leather pants will be more than enough. Then, complete the look with any type of footwear, whether it's boots or loafers. Finding a vest with an eye-catchy color or print instead of one that's solid and neutral is an easy way to add fun and flair to your outfit. In other words, don't overthink it. A basic sweater vest styled over a black top with leather pants will be more than enough. Then complete the look with any type of footwear, whether it's boots or loafers. Finding a vest with an eye-catchy color or print instead of one that's solid and neutral is an easy way to add fun and flair to your outfit.